What's up everyone, it's the Stock here, and let's be real, Forex trading, it's not about getting rich quick. It takes discipline, strategy, and a whole lot of learning from your mistakes. But that doesn't mean you have to repeat everyone else's. So many new traders fall into the same traps, making the same costly errors. In this video, I'm breaking down the top 5 most common Forex trading mistakes I see people making over and over again. And more importantly, I'm going to show you exactly how to avoid them. Trust me, guys. Mastering these basics can be the difference between blowing up your account and actually achieving consistent profitability. So let's dive in and get you on the right track.
All right, mistake number 1, and it's a big one. Overleveraging. Look, leverage is a tool, and like any tool, it can be used for good or bad. In Forex, it lets you control a large position with a small amount of capital. Sounds great, right? But here's the catch. High leverage magnifies your gains and your losses. And believe me, those losses can pile up faster than you think. Imagine this. You're using 500 to 1 leverage. A tiny move against you and boom, your account is toast. Think of it like this. You wouldn't buy a house with a $1 million mortgage if you only had a $2,000 down payment, would you? Of course not. That's essentially what overleveraging is, just in the trading world. So what's the solution? Start small. Keep your leverage low, especially when you're starting out. As you gain experience and confidence, you can gradually increase it, but trust me, slow and steady wins the race in Forex.
Mistake number 2 is trading without a plan. If you don't know where you're going, any road will get you there, right? Wrong. In Forex, this kind of haphazard trading is a recipe for disaster. A solid trading plan is like a roadmap to success. It outlines your goals, your risk tolerance, your entry and exit points, everything you need to make informed, disciplined trades. Think of it like building a house. You wouldn't just start laying bricks without a blueprint, would you? Your trading plan is that blueprint for success in Forex. It helps you stay focused, avoid emotional decisions, and measure your progress over time. No more impulsive trades based on gut feelings. Stick to your plan, and you'll be amazed at the difference it makes.
Chapter 3. Risk Management, Protect Your Profits. Next up is a mistake that keeps me up at night, ignoring risk management. Seriously, this one's crucial, guys. You can have the best trading strategy in the world, but without proper risk management, you're one bad trade away from blowing up your account. Think of risk management as your trading insurance. It's about protecting your capital, so you can stay in the game for the long haul. This means using stop-loss orders to limit your losses on every trade. Don't let emotions cloud your judgment. Set those stop-loss orders and stick to them. Remember, you can't win every trade, but you can control how much you lose.
Chapter 4. Overtrading, slow and steady wins the race. Now let's talk about a mistake that often stems from impatience and the dreaded FOMO overtrading. I get it, seeing those charts move can be exciting and you want to be in on all the action. But trust me, more trades don't equal more profits. In fact, it often leads to the opposite. Overtrading clouds your judgment, making you more likely to chase losses, revenge trade, and make impulsive decisions. It's like trying to force a puzzle piece where it doesn't fit. Remember, quality over quantity. Be patient, wait for the right setups, and don't feel pressured to trade just because the market is open.
Chapter 5. Market Analysis. Don't fly blind. Last but not least, we've got neglecting market analysis. Look, you wouldn't buy a car without looking under the hood, would you? The same goes for Forex trading. You need to understand the forces driving the market before you risk your hard-earned money. This means using both fundamental analysis, looking at economic indicators, news events, and the big picture and technical analysis. Studying charts, patterns, and indicators to identify trends and potential trading opportunities. Think of it like being a detective. You're gathering clues from the market to make informed decisions. Remember, knowledge is power in the Forex market.
Chapter 6, Level Up Your Forex Trading. So there you have it, guys, the top 5 Forex trading mistakes that could be holding you back from those sweet, sweet profits. Remember, it's not about being perfect. It's about learning from your mistakes and constantly improving. Avoid over-leveraging, create a solid trading plan, manage your risk like a pro, don't fall into the over-trading trap, and always, always do your market analysis. If you found this video helpful, hit that like button and subscribe to the channel for more Forex trading. tips and strategies, and be sure to share your own trading mistakes and solutions in the comments below. Let's learn from each other. Until next time, happy trading.